So when I look at Bitcoin, Bitcoin has continued to chop sideways over the last couple days, ever since it tested the 28,500 resistance. And by the way, why is that resistance? All right, because it is the lowest point. Check this out, guys. 28,500, which is the high that we just hit over the last couple days. It is the low pivot of the mid-bull cycle of 2021. So what we know is we're at a pivotal level going into this Fed announcement. If we see a pop on Bitcoin, there's a major level right up here. This is the big one at 30,000, even numbers. If you're a technician and you know charting.
Popular technical analyst and renowned investor Gareth Soloways has given his game plan for navigating the Fed's interest rate decision amid the ongoing banking crisis in the United States. On Wednesday, shortly before the Fed's 25 basis points rate hike and Jerome Powell's press conference, Soloway published a video broadcast during which he gave his outlook for various asset classes, including Bitcoin, USD, and gold. According to Soloway, the Fed has to raise rates at least slightly to keep the markets under control and at the same time assure everyone that the banking sector is no longer threatened. During the broadcast, Soloway also established that the Fed's next moves would significantly affect price movements across all asset classes within the coming weeks. For Bitcoin, the renowned technical analyst predicts a short-term upside move to $30,000. And that might occur sooner than most people expect. As of press time, the leading crypto asset is exchanging hands at $27,680, slightly lower from the intraday high of $28,766. If it regains the previous momentum, it could easily recapture that high and the $30,000 resistance. This is Soloway's current base prediction for Bitcoin, but he has more short and long-term predictions for the leading crypto asset. As we bring you these predictions, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
So what we know is we're at a pivotal level going into this Fed announcement. If we see a pop on Bitcoin, there's a major level right up here. This is the big one at 30,000, even numbers. If you're a technician and you know charting, you know that even numbers matter in charts because they matter to our human psyche. Naturally, up here, guys, up here in our brains, we are drawn to even numbers. All right, we don't talk about 23,752.5. We talk about 50,000. We talk about 100,000. We talk about 30,000. We talk about a million. These even numbers on a statistical basis hold weight. So if we see a rally above 28.5, your next resistance is going to be a pierce of 30,000. For me, I'm going to be looking to inch in some more on the short side of Bitcoin. I'm in the camp that I play probabilities. Doesn't mean Bitcoin can't break 30,000. Let's keep that in mind. It just means that probabilities are the way I position myself. So I started a little bit of a short position at 28,450, right around 28.5, and I'll add to it at 30 and change, a pierce of 30. Now, if we establish ourselves above 30,000 and we stay above for like 7 days or so, and I'm looking for not just a pierce, a close above doesn't mean anything. I want to see a close above. That would be significant to me. The chart has to prove it to me before I believe it. All right. So again, a lot of you guys I'm seeing messaging, asking when could we see 12 to 13,000? I'm looking at 2 to 3 months out if this 30,000 line gets rejected and we see price start coming back in. All right. So 2 to 3 months out, 12 to 13,000, and then likely 6 to 8 months out before we could see that 9,000, 10,000 target if it does. Basically, if we break that 15,000 low, then I actually do think 9,000 is the likely culprit here. Now, I'm pumped because today is a massively important day. All right, we have the Federal Reserve announcement at 2 p.m. Eastern time, followed by the key, and this is the big one, the key press conference. Now, you might say, well, why is the press conference more important than the rate hike or lack thereof? The answer is because that is the guidance that the markets will cue off of. Right now, the markets are pricing in about an 85% chance of a 25 basis point rate hike. I think that's exactly what they're going to do. I'm going to explain real quickly, give you guys the rundown of why you're likely going to see 25 basis points. Okay, go back, rewind. 2 weeks, 2 weeks ago, in fact, 2 weeks ago today, Jerome Powell was in front of Congress. We had just gotten out data that was inflationary, and he basically said to Congress, listen, we may have to go 50 basis points. After that, we saw the banking markets collapse, right? We saw the banks like Credit Suisse, SVB, SBNY, all of these banks collapse, stock prices of all these banks collapsing as well. I mean, take a look at FRC recently, down huge from the all-time or even 52-week highs. So the bottom line is that the Fed was put in a pickle here. They don't want to go to zero right now because there still is, number one, inflation. Number two, if they go to zero, right? If they go to zero interest rates, the markets are going to cue off of that things are a lot worse in the banking sector, that things are very, very chaotic, that there's a potential catastrophic black swan event coming. And so ultimately, what the Fed will do is probably thread the needle with a 25 basis point. This way, they don't really raise much, but they raise just enough to kind of keep confidence that they're in control and that we're not looking at a major banking collapse that's even greater than what we've done. But I'm looking for a 25 basis point hike and then a kind of pause. So we could be looking at not a pivot. A pivot technically would be dropping rates, but I think after the hike today, you're looking at a pause until more data comes out and more stability in the banking market.
Despite recent upside moves and significant gains in the crypto market, Soloway still expects a major retrace to $13,000, then later $9,000. He believes that as economic conditions worsen in the United States, major risk on assets like Bitcoin will be severely affected. However, Soloway is still very bullish about Bitcoin in the long term. In one of his previous videos, he predicted a rough decade for the U.S. stock market and explained that that would push investors toward other asset classes like Bitcoin. It is only when that happens that Soloway believes we could begin to see some great upside moves for Bitcoin, possibly even above $500,000. Let's get back to Soloway's broadcast as he discusses his game plan for gold and his long-term bullish predictions for Bitcoin.
Here's your chart on gold. Basically, what we see on gold is that the consolidation is continuing. So basically from 2020, from the COVID dip and then the reversal to the upside where we made this high just north of $2,000 at 2075, you have been sideways chopping. All right. All of you, if you're new, maybe not. If you've been around me for a little while, you know this pattern formation. This is a classic bull consolidation pattern, right? So if we go out and we look at the chart here, gold's been in an uptrend up until that point, and then it's been in a side trend. You want to see something crazy? Go back to the 1970s. All right, look at this same exact pattern formation. All right, here it is. The 1970s, you had 2 to 3 years up, like we had 2 to 3 years from 2017 to 2020. Then you had consolidation pullback, and then look at the run that gold experienced. To me, this is telling me the future. This chart, which is historic, is telling me the likely probability of what is going to come on gold. Now, do I think it's going to do a 9x? I don't think so, right? 9x seems a little outlandish to me on gold, which is what it did back in the 70s. But is it possible that we could get a 3x? Could we see $5,000 an ounce in 2 to 3 years on gold? Maybe 6,000? I do think so. I do think so, folks. And again, one of the things you have to note is look at the strength in gold. All right. Recently, the strength in gold is telling you institutions are buying. Right now, one of the things, and I said this in interviews recently. I said it to my members at InTheMoneyStocks.com at Verified Investing Crypto. When you told me, and this was one of my key points to David Lynn, even when he was at Kitco News, is that basically one of the things that I queued off of last year, even though gold did not have a stellar year, the dollar was up 20%, and gold was basically flat to negative on the year. That should not happen. All right. In a perfect world where things are equal, if the dollar's up 20%, gold should be down 20%-ish. All right. The fact that you saw gold holding steady, that was barely down on the year, that's telling you big money is buying in. Big money. And we know central banks are buying in. We know that the big money banks are buying in. So what that tells me is that gold continues to be one of my favorite assets for the remainder of this year. Do I think eventually Bitcoin will be my favorite? Yes. You guys know I'm a long-term huge bull on Bitcoin. I just don't trust the rally just yet because, again, probabilities are how I analyze everything that I do. All right, so in terms of resistance, if we go up to the 2075 level, that is now a triple top. Technical analysis tells us that when you have a double top, you're likely to pull back big. So here's your double top. Let's talk technicals here. I want to do some teaching. All right. So let's go into here. Let's see what we got here. Bear with me as I do this. All right. Here was your high pivot on gold. Here was your double top. Double tops, you get big pullbacks. All right. Now remember this because it will be useful in your future analysis. So here's your pullback off your first high. Here's your double top. Here's your pullback. What technical analysis tells us is that if we hit that level again, you only get a small retrace. You'll get a little bit of a retrace like this, much smaller, and then the breakout likely takes hold. So that's what I'm expecting. I think within the next month or so, we likely hit that triple top, and then we see a pullback, a very small pullback, a check back. Essentially, you're going to get sellers there. People are going to say, oh, it's at resistance again. Let me sell. Smart money's going to buy that pullback, and it's going to blast off to the races.
On Wednesday, the U.S. Federal Reserve delivered a unanimous quarter percentage point rate hike, while expressing concern about the ongoing banking crisis. The central bank also indicated that rate increases are coming to an end. There was a notable softening in tone from both the Federal Open Market Committee, FOMC, and Fed Chair Jay Powell. Instead of a certainty of further hikes delivered before the banking crisis, the FOMC post-meeting statement said, "The committee will closely monitor incoming information and assess the implications for monetary policy. The committee anticipates that some additional policy firming may be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time." The committee also sought to reassure investors and depositors about the resilience of the banking sector amid the ongoing crisis. The U.S. banking system is sound and resilient, the FOMC noted. Recent developments are likely to result in tighter credit conditions for households and businesses and to weigh on economic activity, hiring, and inflation. The extent of these effects is uncertain. The committee remains highly attentive to inflation risks. During his post-meeting press conference, Powell noted that the central bank still has some distance to cover in its struggle to bring down inflation. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy, he noted. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. Powell also assured the public that the central bank will use all of its tools to keep the banking system safe. What are your thoughts on Soloway's Bitcoin predictions and the latest rate hike? Is the Federal Reserve at the end of its rate hikes, and how soon can we expect a pivot? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.